What is up, guys? This is the Broke Executive, and today we are doing the January 2021 portfolio and dividend review. This is where I go over the stocks I bought at the beginning of the month and all the dividends paid in the month previous. So this will be covering the December 2020 dividends. And then I'll also be going through my Robinhood review that was shared with me about halfway through last month. So we'll just jump right in. Portfolio overview. I have a monthly return of $190.10. This is through capital gains, which comes out to be 3.04% return. Again, this is not a guaranteed form of income. This is just simply the price of stocks have gone up over the past month. 3.04% is actually a very good month. If you were to look at the historical average, you earn about 7% a year. So yes, it's not quite as big as my November capital gains, but it's still a very impressive number, and I am very happy to see it. In terms of dividends paid, I received $20.16 throughout the month of December. This comes out to a monthly yield of 0.31%, which annualized out over a 12-month period comes out to 3.76%. This is right where I want to be seeing my portfolio. I aim for between 3.5% to 4%. Obviously, not every month I'll be able to get that. This month happens to be a little above that 3.5% minimum threshold I target for myself, and that's good for me to see and know that I'm doing at least something right. In terms of dividend income change year over year, in 2019, I received $6.05, and then again, I received $20.16 in the month of December for 2020. This comes out to be a 233.22% increase, which is lower than the previous months in terms of a year-over-year change. But again, 2019 was right when I started my dividend investing, so it was really just starting to get going. These percentages aren't always going to be absolutely wild in terms of the percent change, but I would like to see it growing, and this shows that between 2019 and 2020, my dividend income has in fact increased. Then here you can see the monthly dividend income growth. This $5.58, that was a special dividend paid out. That wasn't something I intentionally targeted or intended to receive. I just happened to be owning the right company at the right time. Then right here in October, this is the first month I received a dividend payment. That is when my dividend investing has started. And as you can see, there is a general trend upwards through December, and then here January, February, and March. These are dividends that have been announced, but that's not all of the dividends I'm going to be receiving. I will expect the trend to follow the trend line, continuing upwards. Hopefully I'll be able to see some $25, $30, or even $35 dividend payments throughout the months of 2020. Only time will tell if we're actually going to get to those numbers, but I will continue investing with that goal in mind. In terms of purchases for January, I purchased 3 different companies, the first of which is Pfizer. I bought 1 share at an average cost of $36.84. Pfizer has a current dividend yield of 4.23%, which is a yearly income of $1.56 per share. They have grown their dividend at a 6.3% rate over the past 5 years. I now have a total of 4 shares, and this comes out to be 2.29% of my overall portfolio. The second company I purchased is Gilead Sciences for an average cost of $58.25. I purchased 2 shares, coming out to the total cost of $116.50. GILD has a dividend yield of 4.39%, which comes to a yearly income of $1.56 per share. This is a company I did not own previously, so I currently only have 2 shares for a portfolio weighting of 1.93%. And Gilead, very similar to Pfizer, has increased their dividend by 6.3% over the past 5 years. And the final company I purchased for the month of January is Merck. I also did not previously own this company, so I purchased 2 shares at an average cost of $81.83 for a total cost of $163.66. Merck's dividend yield is a little bit lower than the other 2 at a 3.16% dividend yield, which gives me a yearly income of $2.60 per share. Now, you may notice that all of these companies have right around a 6.5% dividend growth over the past 5 years. This is intentional. All 3 of these companies I thought were very promising, very strong, and all are within the pharmaceutical and healthcare business and sector. So I decided to split my money across all 3 rather than putting my entire allocation for the month of January into one company. So my portfolio weighting for Merck is 2.60%. You'll notice all 3 of those are all right around the same amount. That again is also intentional. I was trying to diversify myself within my sector and further diversify my sector within the rest of my portfolio investing. Now, before I get into the December dividends, I was actually going to go over my Robinhood review that they sent out midway through December. So let's just jump over to that right now. So this was sent out halfway through the month of December, so some of these numbers are not quite accurate. I will also kind of touch on which ones are inaccurate because they have since changed. But this is something that they haven't done in the past, and I was actually very excited to see they did it. So slide 1 here, we see 2020 has been quite the year. Let's take a look back. More investors started their journey on Robinhood than ever before. This is a very well-documented fact with all of the shutdowns and lockdowns and people staying home. They wanted to start investing, and people were very excited to be able to, and Robinhood was able to capitalize on that and grow their platform in ways that has never been seen before. I remember the first day I started investing. It was October 5th, 2018. Some of you guys may know I did originally create my Robinhood portfolio in an attempt to start trading penny stocks and become the next Wolf of Wall Street, which is why the next slide will make a little bit of sense as to why I purchased a stock that has since been delisted from the stock market. You can no longer find HSGX, and I had a purchase price of 56 cents because, like I said, I thought I was going to become the Wolf of Wall Street. I was looking at penny stocks, and clearly that has not worked out because I have switched over to dividend investing. I kept close to my investments. I checked on average 6 days a week. This isn't so much of a surprise in terms of, young kid just getting into the world investing. Absolutely obsessed with the stock markets, checking it every day. But in terms of dividend investing, this is a little peculiar because it's not like I was buying and selling stocks throughout the month, but I keep tabs on what's going on. I like watching my companies and how they do and being able to see which ones are performing well and which ones aren't. I made some trades, and by some trades, it's a lot for me, but little for some people I know, and some people who have managed to make the news. I made 47 trades so far this year. Of those 47, only 2 of them were to sell companies. I am a little attached. If you look here at Delta Airlines, that one is because for the longest point in time in my portfolio, it was my largest loss in terms of monetary value and percentage. So I was constantly checking it throughout the spring and the summer, just seeing what the stock price is doing, how it's changing. And then Discover Financial, that's my biggest gainer. So I've been watching that one very closely. Same thing for Realty Income, or O. Again, these are 3 companies I've talked about in the past, 2 of which you guys know I love to death. And the other one, I'm just hoping it can hang in there and get back to paying dividends in the future. I made new discoveries this year. I added 59 companies to my watch list, including Charles Schwab, Tootsie Roll, and GM. Some of these companies added to my watch list are because they were making the news constantly, and I just wanted to be able to keep a closer eye on it. Other companies were added to my watch list because they're dividend-paying companies that I'm looking to expand into and purchase. And this is where I kind of have a bit of an issue with this Robinhood recap. It says I chose stocks in 6 sectors. You guys may know I define my sectors a little bit differently than how the rest of the financial market works. So yes, I did purchase 6 sectors according to Robinhood, but according to me it was 8. That's how I've decided to divide my money up, and there's no real reason for me to be upset about that. I know it's a little different in terms of my own portfolio than what Robinhood is telling me. I made some pocket change. Literally, for those not aware, Robinhood has something called the cash management feature. This is where they take your uninvested money and they sweep it into banks and high yield savings accounts, and they pay out interest. When they originally started this back before interest rates dropped, it had a fairly competitive interest rate. At this point, it's close to 0, just like every other savings account, but I was able to receive 18 cents in interest. I did receive an additional penny at the end of the month, so that was 19 cents throughout the year of 2020, but not something I'm seriously looking at in terms of reward and return. I got paid a little extra. As of December 15th, I received $85.50 in dividends. That number did go up towards the end of the calendar year, and I will be discussing in my next video how much I actually made throughout the year of 2020. If you guys really want to, you can do some math and figure it out, but I will be talking about that in a month's time. I'm a trendsetter. I was able to refer 2 of my friends this year. I'm hoping to be able to refer more of you guys. I do include a referral link to Robinhood and Webull down in the description of the video. If you sign up for Robinhood, you can get 1 free stock. And then if you sign up for Webull and deposit $100, you can get 4 free stocks, 2 of which could be worth up to $1,600. Very easy way to get started in your investing. And you can continue to help me be a trendsetter according to Robinhood. A bunch of legal that it's essentially telling you everything that you're supposed to know before you invest, and this is where I give my own words of legal and compliance, saying I am not certified in teaching investing. I cannot tell you which companies to buy or sell. I am simply here showing you guys what I am up to with my own money. And then I would also like to thank Robinhood and you guys for being part of my investing journey. And here's to 2021. All right, we can get back into my December dividends right now. On December 1st, I received $1.14 from Pfizer. On December 3rd, I received $1.76 from Discover Financial. On the 8th, I received dividends in the amounts of 3 cents and 28 cents from my 1 to 3 year treasury bonds and my corporate bonds. On the 9th, I received $1.01 from Johnson & Johnson. On the 11th, I received 2 dividends, one from Emerson Electric for $1.01, just like Johnson & Johnson. And then I also received a Microsoft dividend in the amount of 56 cents. This is an increase from the previous Microsoft dividend, so I was able to gain additional dividend amount by simply holding the company. I didn't have to spend more money to increase that dividend from its previous dividend. On December 14th, I received $1.47 from 3M. On December 15th, this is my first of 2 quadruple dividends for the month. I received $1.20 from SCHD. This is a dividend ETF. Then my 2 monthly real estate paying companies paid out in the amount of 96 cents and $1.40 for Stag Industrial and Realty Income. And then Coca-Cola paid out $1.64. And then a few days later, on December 23rd, I received another quadruple dividend. This was the second one. My 3 to 7 year treasury bonds, my 1 to 3 year bonds, and my corporate grade bonds have all paid out a second dividend for the month. The 1 to 3 treasury bonds, I was not able to get that one because I purchased after the ex-dividend date, but these dividends are to make up for them not paying a dividend in January, which many of my companies that would traditionally pay in January move their dividend to December for their own tax purposes. They're allowed to choose when their dividends are paid. Then the other dividend I received on the 23rd is from the Spider Portfolio S&P High Dividend ETF. This is just another dividend paying ETF. This is one of my smallest positions, but I still managed to receive $1.82. Then on Christmas Eve, Bank of America paid out $1.26. On the 28th, VOO, or the Vanguard S&P 500 ETF, paid out $1.38. On December 29th, BNDX actually paid out twice the amount of 23 cents is their January dividend that would traditionally be paid on the 5th of the month, but they have moved it to December for their own scheduling reasons. And then the second dividend here of 45 cents. This is a special dividend that BNDX pays out at the end of every calendar year. Last year it was about $1 a share. This year it's a little bit lower. Interest rates and loan rates and treasury rates are all much lower this year. So seeing it as 45 cents, not too upsetting, especially because this is money that traditionally you would not expect if you were looking at a standard dividend plan. On December 30th, my birthday, I turned 22 and VTI gave me a birthday present of $1.56 and Union Pacific paid me 97 cents. Then on the final day of the year, SPHD paid at 46 cents for the month, and that completes the dividends I was paid in the month of December. All right, with that is all the dividends I had and the quick portfolio update. As I stated, next week I will be showing how I track my dividends throughout the calendar year, and I will be showing you guys and breaking down the total amount that I received throughout the calendar year and giving you a hard count on exactly how much I received in dividends. And then here you can see my final end of year total. I earned $820.69 over the course of 2020. This 14.52% return is obviously out of the ordinary. In a traditional sense, you're looking at a 6 to 7% return every year averaged out. Good to see that I was able to outpace that, especially because I was adding lots of money throughout this entire downturn down here, and as the market rallied, I continued putting money in. That really helped me be able to exceed that 7%, and this is why just constantly and consistently putting money into the market is great to do. And with that, I will ask you guys to like this video and subscribe to the channel so you can see when my video comes out next week, and I will see you executives in the next video.